Welcome back, students who are taking financial accounting, and in this series of videos we are working on the assigned homework problems from the digital study guide for chapter 10, the group B problems that are part of the exercises. Okay, come on, slide, there we go. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. So we're working on 10-35 and it's accounting for cash dividends. So this is the stockholders equity section of Tri-State, and it says here, assume the preferred stock is cumulative, right? Compute the amount of dividends to preferred and common shareholders for 2014 and 2015. If total dividends are $18,600 in 2014 and $42,800 in 2015. Okay, so let's look at our information here. All right, so we have preferred stock at 8%, $12 par. All right, 100,000 shares are authorized. All right, 25,000 shares are outstanding. So what's important as far as our preferred is the 8%, the $12 par, and the 25,000 shares. Okay. Now remember, preferred takes precedence over common stock. Right. So whenever a dividend is declared, we look at preferred first and see how much of that goes to preferred. Right. Now we can't just automatically say whatever's left over from the dividend goes to common. Right. As I said, and this is part of the variety of situations, it is possible to say preferred gets a portion, then common stock gets a portion, and then anything remaining left over goes back to preferred. Okay, so yeah, you have to actually pay attention to the setup, and you also have this issue of cumulative and non-cumulative, right? Remember, if nothing is stated, we assume it's cumulative. If it's stated cumulative, obviously it's cumulative. But for it to be non-cumulative, it has to actually be stated as non-cumulative. So in this case here, they're telling us it's cumulative, right? Meaning preferred will always get their money first from period to period. Nothing is ever dropped off. So let's figure out how much of the dividend is owed to preferred each and every year. All right. So we have 25,000 shares, and it is at 8%, and it is at $12 a share. Okay. So 25,000 times 8% times $12 is $24,000. Okay. That's how much in dividends the preferred stock gets every year. Right. So for the year 2014, the dividend was $18,000, $18,006. Okay, so out of $18,006, right, preferred gets $24,000. Right. Well, there's not enough. Okay, to pay the preferred shareholders. All right, they're short $5,400. Right. So out of the dividend for 2014, the full 18,600 goes to the preferred shareholders because they're owed 24,000. So cumulative means what's carried over. $5,400 is still owed to the preferred shareholders when it comes to 2015. So in 2015, right, the dividend is $42,800. Okay. Now, out of this $42,800, the amount owed from 2014 for the preferred shareholders is $5,400. So we have to subtract out that first, and that comes out to $37,400 left. Then the preferred shareholders' share of 2015, which is the 24,000 that we calculated, right? That comes out next. And that means there's a remaining, oops, sorry, 3. There's a $13,400 that is left over, and that amount goes to the common shareholders. Okay. So in 2015, right? So in 2014, the preferred had gotten 18.6, right? In 2015, the preferred had gotten the 24,000 that was owed for the year plus the 5,400, so it had gotten $29,400 in 2015, and that's for preferred. So in 2014, the common stock had gotten 0, and in 2015, common stock had gotten $13,400. Okay. All right. So, watch the video again, work through it, and realize that these situations are going to constantly change, but you have to do enough of the problems in order to get a feel for what to be looking out for. And the understanding of the idea is the same. I mean, preferred gets paid first, and if it's cumulative, anything that's owed to them that they didn't get paid for carries over, right? And depending upon the situation, generally, mostly, common stock gets what's left over. But there are certain instances where they don't get what's left over, right? It's all part of the variety of situations, right? But that's the general gist of it, and watch the way it's worked out. If you don't understand something, definitely telephone and speak with an instructor, because if you're getting lost, you're only going to keep on getting more and more lost and getting more and more confused until you can in your mind see what it is you're supposed to be doing exactly. Okay, so let's go down to 36 here. The following elements are adapted from the balance sheet. Okay, so we have preferred and common. Sandler Corporation paid no preferred dividends in 2014, but paid the designated amount of cash dividends per share to preferred shareholders in all prior years. Compute the dividends to preferred and common shareholders for 2015 if the dividends were $175,000. All right, so let me see here. Sorry about the phone ringing, but I'm not going to stop the video to answer the phone. Okay, so the total dividends in 2015 is $175,000. Okay. So we have preferred stock cumulative, 2% par, right? Note 7, preferred stock designated annual cash dividend per share is 75 cents. Okay. See what I mean by a variety of things? Okay. You have to pay attention to what's going on, right? The annual cash dividend per share is 75 cents. There's 65,000 shares, right? So if I have 65,000 shares at 75 cents, right, that comes out to $48,750 of dividends for preferred stock per year. Okay. let me jump up to the other exercise. Notice over here, I'm going to do this in black. Notice that it said preferred stock 8% here. Okay, that is what the preferred is getting as far as dividends is concerned. Their share is 8%. But down in this problem, notice that it says here's the par, but it didn't say 8%. It says note 7. And when we look at note 7 right here, okay, it tells us that designated annual cash dividend per share. The dividend per share is the 75 cents. So you see what I mean by variety, okay? You don't always just see it's not just cookie cutter the same way. It all depends upon the situation, and there's an example where the situation, is varied, but the idea is still the same. I calculate the dividend, okay, and it's going to be cumulative, all right? So if the dividend is $48,750, and that is what was owed in 2014, right? So that's 48,750. That's what was owed in 2014, and it's also owed in 2015, right? Because this is cumulative, right? It says here cumulative. So the total amount, total for preferred stock, right, is $97,500. That is how much is owed to preferred because they didn't receive the dividend in 2014. Now in 2015, when the dividend is being 175,000, preferred gets paid off first, okay, of the 97,500. So the total that goes to common stock ends up being $77,500. Okay. All right. So let me just quickly go back over this. So you see where all of the parts are coming from. All right. So these are the elements on the balance sheet, right, in the stockholders' equity. And it says preferred is cumulative. And it says its par is $2, but the note here says the annual cash dividend per share is 75 cents. Well, if there's 65,000 shares at 75 cents, that's our calculation here, we get the 48,750 that is owed each and every year. All right. Now it says Sandler Corp paid no preferred dividends in 2014. Well, if it's cumulative, right, if the stock is cumulative and it wasn't paid the dividends in 2014, that means that the preferred stock is still owed for 2014, but paid the designated amount of cash dividends per share to preferred shareholders in prior years. So basically it's just saying that the dividends for the preferred shareholders for the years 2013 and prior were all paid up to date. So we're only, all we need to know is that 2014 is still owed. So now it says compute the dividends for preferred and common for 2015 if the dividends are 175,000. Well, you can't just take 175 and then take out the 48,750 for what's owed in 2014 because this is now 2015 and 48,750 was owed in 2014. 48,750 was owed in 2015, right, which is what we're showing here. So preferred gets 97.5, right, out of the 175, and what's left over goes to our common stock. All right, so that's it for that exercise. And again, if you didn't understand what was in the last video, or these two exercises in this video, watch them again, get the thought process down, but realize that you saw a variance here. Okay. There was a variance. There was a variety of, a difference in the way things were treated. It isn't, everything isn't cookie cutter, right? It isn't just 8%, okay? In this case, it was 75 cents a share. So you need to watch for these anomalies, but the basic process still remains the same, and that's what I'm trying to get by saying make sure you do these exercises, because I can explain theory to a certain extent, but because of the variety, I can't cover all situations, and the more exercises you do, the more things you see, the better you become at it, and that's all there is to it. So if you don't understand something, feel free to, telephone or email an instructor, and we'll try to help you out with, those situations. But it boils down to doing enough problems. All right, so I'll see you in the next video.